Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets and the markets closely associated. Of course, every market seems to be closely associated, especially today. Rob, you just brought up the point that everything's up today together. Why is that, may I ask?
Well, I think Chairman Powell hints at giving Wall Street back the punch bowl without actually doing so, right, Miles?
Sorry. Prior to our recording, I was making a little joke there. I was on the phone with a client. I didn't catch the announcement this week. I probably can guess what he said. We're totally going to give the punch bowl back eventually. For the time being, this is where we're at. Mm-hmm. He probably said it more eloquently, and he stretched that out for a while. Yeah, Tori was giving me a hard time before we started recording because I was so disappointed in December when he said he was lowering interest rates. And then I was so excited when he didn't. I had almost lost faith because I really think he's doing it on purpose. I really do. I think I've got this figured out now because I was heartbroken in December, but it's the same thing over and over. And I think he's doing it on purpose because when you listen to the Fed announcement, he gives his presentation 15, 20 minutes, and then he opens up for discussion and questions. And he's sitting in front of a room full of children. And they're asking the same question over and over again. When are we getting the punch bowl back? Eventually. Okay, next question. So when are we getting the punch bowl back? I said eventually. Next question. So about this punch bowl, and it's just the same thing over and over and over again. It was months. So I think he's just tired of dealing with it. So he's like, hey, we're going to give the punch bowl back, but just not this time. And that's where we're at.
But we are committed to that 2% inflation goal, and we will be at 2.5% next year. And 2 years out, we should be at 2%. So he is stretching out his commitment for inflation, and he's telling Wall Street what they want to hear without actually doing it. And, of course, the Dow is up at record territory. The Dow is now at 39,500 plus points, up over 400 points just today. So he is cutting the Fed balance sheet by $1.5 trillion. What's the balance sheet right now? Around 7-something trillion?
About 7.5.
7.5? Yeah. He's on track for doing the three things that you said he needed to do. Cut the balance sheet.
Raise interest rates.
Raise interest rates, go after inflation. He can't really solve the budget problem because talk about a room of children, Congress and the White House are just, we need to get the adults back somehow. But at the same time, I think he's doing a good job, Miles. I liked what he had to say. He presented himself extremely well, and the market responded favorably. He is actually creating room in case the wheels do fall off. He's got, like Tori, you mentioned, he's got room to cut interest rates if he has to. He's got room to reinflate the Fed balance sheet if he has to. In the meantime, everything's going his way, and he's able to sell off securities out of the Fed's balance sheet into a very strong market.
I'd be real careful, Rob. Real careful being optimistic on YouTube about anybody in government or at the Federal Reserve Bank. You're gonna get some comments off that one. But I do agree with you.
Says Powell's biggest cheerleader,
right.
that I've known.
I do agree with you.
No, you guys, it is something that's necessary. I mean, ultimately, when gold is up, that's good news for the gold owner, but it's bad news, right? Mm-hmm. So we're not sitting there saying, hey, go gold, go, just because that means that everything else is looking bleak. And they have done a good job of shrinking the balance sheet. Unfortunately, it ballooned to $9 trillion. That never should have had to happen. Yes, they're raising interest rates. Unfortunately, they're in a much more realistic territory, but it shouldn't have had to happen because of the rampant inflation that we had. So, Miles, is today's rally across the board in response to? You talk about buying the rumor and selling the news. How many times are the markets going to believe the rumor? All he does is state the rumor from the microphone, every FOMC meeting, and yet the markets just are giddy. They know the punch bowl's coming, and what happens when it actually does come?
Well, Miles, before you answer that, let's talk about the Bureau of Labor Statistics. Every time they come out with data, those numbers are revised in reverse.
Yeah, I was going to say, which layer of data, the first numbers or the revised numbers?
The revised numbers always come out worse later. So as we talk about buying the rumor and selling the news, all Wall Street has been doing is buying the rumor. They have never sold the news. The news comes out later, much worse than what was reported, and yet they continue to puff that market. We're setting ourselves up eventually.
Well, and I wonder where the investment comes from, right? Where's the cash warehouse that they're dragging wheelbarrows full of money out of to boost the markets across the board? Boost the gold price up, the silver price, the Dow price, the tech stocks, everything up. It's an everything day.
Yeah, Bitcoin's up 8.5%.
Bitcoin.
Yeah.
Yeah. Where's the cash reserve going into that?
I have no idea.
Because you talk to the average American nowadays.
They don't have
you, me. Yeah, we don't have it. We're either fully invested or we don't have any money. It's one or the other.
Yeah, this is a good example of wealth transfer, but also a division where the rich get richer and the poor get poorer. We're disintegrating the middle class. And that's what you're seeing is, yes, Wall Street is being forced to tighten their belt. There have been, in just January and February of this year so far, 222 bank branches closed. Nobody talks about that. All right, Bank of America alone has closed 41 branches, and they think that that's going to save them approximately $100 million this year. That's a substantial amount of money, but it's necessary because of the interest rate pressure that all of these banks are feeling. And as debt starts to roll over, as it has to get sort of refinanced and renewed and all this sort of stuff, the people, the average citizenry can't really afford to do it and don't have the same tools at their disposal and the same brakes that the wealthy do, or these elite corporations. And so that's really what you're seeing too in these equities markets. Yeah, maybe there's some small winners. There's some people that did get into NVIDIA, but if you didn't have the Magnificent Seven and the easy money from the Fed still has $400 billion intended to be injected between now and the election into the economy. $400 billion. That's easy money. So even though it's not adding to their balance sheet, it's still market manipulation. And unfortunately, that's, again, all those reasons that, Rob, as you harp on all the time, that's increasing money supply.
Yep.
And that money supply is what drives gold higher.
Yep.
And that's negative news. And so don't be surprised that it's going up. The only thing that is down today is the U.S. dollar, which it should be because it says, well, this isn't good for the dollar, to ultimately reduce rates and increase the credit markets. But that's what's going to happen.
Yeah, the 30-year bond is actually down too, and 30-year bond increased in yield, and so its market value dropped. That's the other red flag out there. That's about it, 30-year bond in the dollar. Everything else is in the green.
Well, what about the move in gold, Miles? I mean, as we look at the charts, finally getting here to what it is we focus on, I mean, we've seen a nice $30 conservative move here just since the Fed announcement came out at 2 o'clock Eastern as they started talking. Gold was sitting right around 2,158. Now here we are at 2,188. Again, up over 1%. That's great. But anything changed for you technically?
Not necessarily, only because we didn't put in either a high or a low compared to previous highs and lows. So we're still sitting in that range. Nice big jump today, but expected. The trend had been down since what about the 12th or 13th, so last week. But that's following on the heels of the pretty significant rise up from the 1980s to all-time high, March 8th. So a little bit of a pullback, a little bit of a jump up today. My gut would still tell me probably see gold continue back down because I'm a catch a wave guy. I'm not a grab the turn. I'm a pick up on the momentum kind of guy when I'm looking at charts. Now, what does concern me a little bit about this from a gold price going higher optimism standpoint, I'm always concerned by my own optimism. I recognize that can be a little confusing for some people that don't know me, but I get real scared when I'm optimistic. We did technically have enough time here. Looking at longer term candles like 4-hour candles or even daily candles, certainly the 4-hour candles, we've had enough time here to really shake the overbought status out of the market. So because we didn't have a rapid reversal, if you look back to the reversal we had in December, it was up and down, $150 in a single day, and then turned around and came back down to sub 2,000. Well, this time we had a very minimal drop, like 2195-ish down to around 2150, and it took a few days to get there. It's really shaked the panic buying out of the market. And you honestly could, if we see gold kind of inch up, you could see us build a base here. We don't necessarily have to have a significant pullback. In fact, oftentimes, if you look back through history, when breakouts do finally happen, they just kind of chip away at that line in the sand until eventually they break right through. You don't always have to have the big, perfect Fibonacci corrective reversals that give people entry points. Sometimes you just miss it, and that's fine. That's fine when that happens. It happens occasionally. So nice jump today. Today's jump doesn't change.
It's not a new high, like you said, but we're close. We're a few dollars away. But, your chart from a couple of weeks ago is still intact, it appears. I mean, based on conjecture and, the best that we can do predictively, you could see 2,300 to 2,340 on the gold price. And
absolutely.
That's okay.
We'll
still,
see.
Yeah, there you go.
Yeah.
And then it's a matter of, do we get a pullback after that? We've got another FOMC, another Fed announcement coming in 2 months, and that one has a slim possibility of them cutting rates then as well. And you may have the same conversation here in a couple of months with the May release of the Fed meeting, with them saying, hey, the CPI or the inflation numbers haven't changed, we still can't cut rates. And we may be having just a repeat of this conversation at new highs.
Yeah, I think that's reasonable. And I'd say there's an 86% chance they don't cut rates. But maybe that's just me, because I still have faith.
That's what the experts are saying.
Yeah. The experts are hoping the opposite.
But why would Powell cut rates in May or June or April? Because the Dow is already in record territory. He's getting everything he wants without cutting rates.
That's a good point. It's a very strong point.
And why do you like rates high if you're Powell, Rob? What's the benefit of having rates, be higher?
It gives you room to the downside in case the wheels do come off.
There you go.
I think he is doing a credible job of preparing for a worst case scenario and enjoying the benefits of talking like Wall Street wants to hear without actually doing anything.
And you guys remind yourselves of this too. I mean, with this aggressive rate policy, gold should be down.
Yeah. Well, that's a great point.
In any other environment, it's working against.
That's a great point.
Yeah. Your real rate of return is being chipped away at, except it's not because inflation's so high. But imagine if the wheels do come off. This is a whole new base that makes $3,000, $4,000 gold seem like nothing if and when the wheels do come off and they are aggressively cutting rates again, which is very weak dollar policy, very strong for gold, and yet here we are at 2,188. That's incredible.
I wonder how much of this market move from the equities to precious metals and everything in between, real estate, I kind of wonder how much of this market move is actually just the natural rebalancing of markets against the inflation over the last 5, 10, 15 years.
Yeah. And then start working in a predictive component to what happens.
Right.
Well, make no mistake about it, we have to roll over a significant chunk of our national debt, upwards to almost half by 2026. So if Chairman Powell believes he's going to see inflation cut to 2% in 2 years, as they are rolling over treasuries into a higher rate market, and a government that is borrowing $1 trillion every 100 days, this is unsustainable, make no mistake about it.
All right, so Miles, what about silver? I mean, we can't ignore it's had an even proportionately bigger move today. In terms of those charts, we still are not at your $26 line in the sand, if you want to call it that.
It just, of all days, seriously, today was the day, right? I'm so frustrated. I just live in a constant state of frustration with silver. Today should have been the day. We're so stinking close. Yeah, we're still looking at the high in November. We're still looking at the high in May of last year. We're still looking at the chunk of highs back in April of 22. Man, the trading range is just compressing down and down and down. I know, Rob, what was it, 2 weeks ago, I think you and I talked about just that extended compression in the silver chart, and it's just got to get there. I mean, technically, by virtue of the top end compression down, yeah, we've had a number of breakouts. The silver price continues to break above the compression line, but fails to get above the previous highs. So all it keeps doing is just extending this trading range out. And it's so frustrating because gold gets to 2350. You gotta see silver start making some moves here, at least up to 30 or 35. I mean, we don't need to see silver go up to 50 or 75 bucks at that point, but you've just got to see that little bit happen here. I'm constantly reminded of 2010, 2011. It took silver a long time to play catch up, but boy, it was scary when it did.
Mm-hmm. And we're still half of the all-time high where gold is parked at its all-time high. So there's still a lot of room to the upside if it could ever get legs.
Yeah. And it will. Again, I'll keep saying this all show. It will. It will hit 2350. Gold will. Silver will get legs. Silver will be 50 bucks again. It's just, do you have the foresight and frankly the stomach to accept the fact that you and we don't get to choose when that happens?
Well, that's right.
That's the thing I've always loved about what I call the Warren Buffett strategy. Do what you know is correct and will happen and never care when it does.
Good point.
There you go. And the Dow to gold ratio is telling you the story. That's what, to me, instead of the nominal value, instead of just focusing on the price, look for the value, because the ratio has come down from 92 to 85 today. Maybe, Miles, it has started. Like, it has to start somewhere. So there is a someday, but that someday has to start. And a 7-point move in the gold to silver ratio,
it matters.
There's an argument, that could be the start.
Yeah. Yeah, you said Dow to gold ratio. That was a Freudian slip we should leave in.
The gold to silver ratio.
The Dow gold ratio is at 18 to 1. It takes 18 ounces of gold to equal the Dow. And we could easily get back to 5 or 6 ounces of gold to equal the Dow. So,
well, and here's why that's a great Freudian slip, is because the Dow's screaming today. Gold looks good, but the Dow looks amazing. Except over the last 2 weeks, the Dow to gold ratio has gone from 19.5 down to under 18.
Yeah, think about that.
So gold has actually increased percentage-wise higher than the Dow has. So gold still continues to beat the stock market, even when the stock market looks exceptional.
And the stock market's doing great, in the last 6 weeks and getting a lot of attention, especially certain stocks. I mean, we can't compete with some of the Mag 7, certainly NVIDIA, but here's now silver up from that low in February. It's up 17% now.
Right.
That's a very strong short-term move that any investor would be happy with, no matter how speculative you are in that period of time.
Well, that's going to do it on a pretty exciting day here at Golden Rule Radio. Markets across the board, fireworks everywhere. We'll see what happens after the fireworks pop and what the next week or two looks like. Hopefully the markets keep the legs, the interest rates keep rising, markets get stronger, the government stops overspending, and everything's going to be just fine, right? See? Optimistic Miles is scary. It scares even me. So thanks as always for listening. This has been Golden Rule Radio. If you liked what you heard, hit the YouTube buttons. Better yet, why not head over to our website? We can be found at McIlvaney.com. We're also on Twitter at ICA Gold and Facebook at McIlvaney Financial. If you'd like to speak with us or any of the advisors here at McIlvaney Precious Metals, you're welcome to give us a buzz anytime at your convenience. We can be reached at 800-525-9556. Thanks again for listening and hope you have a great week.